Hello and welcome. I'm literally just carrying straight off from the last video. You're going to see a different video, but no time has passed for me other than minutes. That's why the last video is still up on the screen. So I'm just going to keep going, see what we can find. We've looked at this, haven't we, Criteo? I feel like we've looked at it again reasonably recently, actually. So I'm going to pass that, go to CLM, Cornerstone. No, I'm not interested in an investment fund. So we're going to pass that. Harley Davidson we've done recently. Still declining by the look of it. When did we do that? Last week? Week before? Still declining. Some interest in how the finance section is going to work out with Harley Davidson. If you go back and watch the video on that. Sold off all there. Not all there, but sold off the majority of their loan portfolio. Someone else now deals with their loan portfolio, so they've de-risked. They're going to keep 1/3 of their loans. Obviously, that needs to build back up for them to get a reasonable level of cash flows from that. So, potentially one to watch in the future if it keeps getting cheaper. How much cheaper, though, I don't know, because they've also got a decline in their in the demographic. The demographic of their user base is getting higher. So there's a decline or a future decline potentially of people willing to buy their motorcycles. So interesting. I have done a video on 2 videos I've done on Harley Davidson. Actually, one of them on the, I suppose, the motorcycle side of it, and one of them's more on the finance side of it. So if you're interested in that, it's worth a look. CRF, another fund, not interesting. Looked at these before as well. I've got a funny feeling there's a huge amount of debt. And there's a hell of a lot of competition from China. Cheap plastic stuff, staplers and all that sort of thing. I don't know what their inventories would be worth in a fire sale. Bugger all, I'd imagine. Even if you took this at face value, 400 million, say inventories of 75 million, 475 million. Factory, so $1 billion. Let's say $1 billion. Nothing on the leases. Deferred income taxes, I think, would go as well. Goodwill, fucking worth nothing in liquidation. Intangibles, is there any worth to their name? Name brands? I don't know. Difficult to tell. So I'm only looking at $1 billion. We've got 1.6 billion in total liabilities. So no. Just going through this quickly because I have done a video on this before, but as it's on the screen, and we'll go back through it quickly. 68 million operating activities. Cost of acquisitions, that's buying businesses, so that's not a consistent thing. Therefore, 20 million, 70 million, 50 million in free cash flow, way down on historical. CapEx has gone up as well. If we're using this as a CapEx. What's the share count? 50 million. Oh, wrong one. 90 million. Share price. 5-6 years to pay it off. Not interested. The reason why I've got a blue, which for me is to keep an eye on it, is because if it gets down here, then I'm going to start being interested in it. I think I actually must have looked at this a bit further back than I realised, because I'm sure I had an alert on it, so let's put another one on. What we're trying to do, expiration, this one here. Custom date, so look. Far out can we go? 19th of May. If we can get down here, I would be interested. As Michael Burry said, sheer outrageous value is sometimes enough. What's this then? Digital engages in the provision of financial technology solutions focused on consumers, individual entrepreneurs, It's in Brazil. What's it come up with on the SEC? Oh, I might have looked at this one before I fucked it off. Won't get there in the end. I'm pretty sure I've looked at this one before and fucked it off. Anyway, not gonna look at it now. Angie, done a video on them. So we're not going to do that. That's only a couple of videos ago. What I will do though is this. So I show that I've done it. Not interested in this. Medical Holdings, not interested. Nomad Foods, I've done that. So we'll do this. SiriusXM, I've looked at. Berkshire Hathaway's big in this. Very big in this. For SiriusXM, Berkshire Hathaway's big in it. It's not a big position for Berkshire Hathaway, but they are in it. Some newslet. Can reach tender and discharges remaining notes using. Okay. This is post my video. 1.25 billion of almost 6% senior notes due 2032, so 6 years. Sold apart to non-US persons. Due 26, so they've paid off. Redemption will fund the tender and redemption of and redeem 250 million worth of 5% notes due 2027. So they've done something to sort out their near-term debt issues, because I can't remember what their free cash flow was, if I'm honest. Interesting. Okay. Worth having a quick look at them again to see what's going on. Keep an eye on it. Tell you what I fucking haven't done for a while, and I keep saying I haven't filled out my tracker. So far behind on my tracker. I think I'm going to have to fuck off filming a video one day and update my tracker so I can keep my finger on the pulse. I think SiriusXM's in it. Might be one of the last ones I did. Here we go. Yeah, look at all the Berkshire Hathaway purchases. What's the price now? 22. So some of them are higher. 60 million. I was of the opinion that if Berkshire Hathaway is still buying, they're not really going to have a debt problem. People will lend knowing that Berkshire Hathaway is a large owner. 2.4 times interest coverage, half debt due in the next 3 years. So they've done something with that. How much debt have they got? Long-term debt they've got rid of. I don't know what they've got rid of. Half of debt's due in the next 2 years. Let's have a look. Where is the debt? Leases, debt schedule. So is that what they've paid off, or was it this? So they covered all of this? Is that what we're saying? I think that's right. Covered $1 billion of this and some of this. What was it? 1.25 billion. Is that right? Is that what I read? Which is approximately 50% of its 3.125 during 2026 in the. Oh, okay. Didn't do all of it then. $500 million remain outstanding. I think they had reasonably good free cash flow though. Is that my thing? I didn't write the amount. I just started writing the amount. I wrote the dollar amount, but trading less than 10 times free cash flow, 15 times EV, likely due to debt levels. Okay. This 5% dividend yield. This is my assumption. Was Berkshire's thesis was likely 5% dividend yield, so a good place to park cash. Debt paydown could unlock around 50% value in equity. If free cash flow could stay solid and debt paydown is good, then the multiple could get much lower. So, yeah. Worth noting that they've done something with the debt. What did they do with the debt? I'm just going to drag this off screen a minute. March 2026, 500. We're just going to say 500 million, isn't it? 500 million, 50% of 2026 debt paid off with issuance of new 5.875% notes due 2032. So kick the can down the road. Effectively. Sure, what did the other one say? Because the other one said, one of the other ones said that they paid off something else. 250 million in the 2027s. Also used cash to pay off 250 million of 2027 debt. Right. That is in the tracker. We're updating the tracker as we go today because I'm a bit fucking annoyed I haven't done it, to be honest. Hospitality, provision of live adult. I've looked at this. Sure, this is on the tracker as well. What did it's not coming up here. What's going on here? That was there. So I couldn't grab hold of it. Sure, this is in here. Is it? Oh. Yes, it is. A lot of insider purchases, but not a huge dollar amount. Balance sheet. Yeah, so the licenses aren't worth a lot. Total debt, 240 million. 282 million in PP&E, 33 million. 45 million TAs cash and receivables, 282 million in PP&E. Intangibles, 167 million, which I said are not worth a lot because it's only known in Texas. Balance sheet, free cash flow, 40.4 million, 11 times, apparently low compared to industry average. Own historical average of 20 times. We're still coming down. It is still coming down. Let's have a look at it from a technical analysis point of view. Where's the next logical stop? Because we've blown through these. So where's next? Here. Definitely there, I'd say. We put an alert down here, just to take another look down here. Let's do it. I've got no fundamental reason to think that it's going to go down there. It's purely technical analysis, purely the hoodoo. Tredegar Corporation, what do they do? Manufacture of polythene PE, plastic films, polyester films, aluminium extrusions. I looked at this before. I feel like I've come across this company before. I mean, they've done alright since there. 50% was 100% up, or close to 100% up at one point. Let's get the balance sheet up. TG, SEC TG. And what have we done there? Caps lock on there. SEC TG. Got to lift my microphone up a minute. I'm speaking over the pop shield. Balance sheet. Tredegar Corp. Ooh, that's a lot of cash. Oh no, it's not. It's million. It's in millions. It's in thousands. So that's 6.7 million. Accounts receivables. Inventories. Buildings, land improvements, machinery and equipment. Total PPE of $500 million. What's the total liability? Total liabilities are really low. Really low. 154 million. I'm trying to think how Lee Lu did Timberland. He did working capital, which he did as total current assets minus total current liabilities. So what have you got there? 60 million. Then he went on the earnings. Did net income 33 million, 50% yield, return on capital. Okay, we're gonna have to drag this in. Did I get that right? I don't think I got that right, did I? Look at that, 60 million plus, that's where I fucked up. So he did total current assets minus total liabilities, total current total current assets minus total current liabilities. So we're going to say 60 plus long-term tangible assets. So you're looking at 580. Net property, plant and equipment, not total property, plant and equipment. Only feeling he was using net. That's going to pump up your return on capital as well. What are we saying then? 200. And then what was it? It's going to be way worse than what I was saying just now. Where's the income one? 33, 200. Yeah, way worse. What is that? 16.5% yield, which is still better than what you'd have on a bond. Do we bring this in? Yeah, go on. What was it called? I've forgotten what it's called already. TG. I'm getting quite tired now, actually, so I may end up having to pause this video and I won't come back to this fucker until probably 3-4 days later. It's just the way at the moment. What am I doing? I really forgot what I'm doing. TG, dragging it in here. See what the Joel Greenblatt formula for return on capital is. It's very similar, actually, Joel Greenblatt's magic formula for return on capital to what Lee Lu was using in the Bruce Greenwald lecture. Very similar. Using only the tangibles and then the earnings against it. Now I've got two different things on my spreadsheet where I do the earnings and then the free cash flow. So what is the free cash flow return on capital? What is the earnings return on capital? Right. Here we go, down here, 15%. That's what I said, didn't I? Did I say 15? 16, I said. Okay. Simple free cash flow is 8. Okay, so my maths was right just from doing this, the fast Monish Pabrai return on capital. Not Monish Pabrai, Lee Lu. So if you want to know what he's using without having to watch the lecture, I would recommend watching the lecture. He's using current assets minus current liabilities as working capital, and then adding the sum of that to the fixed tangible assets, which I think he was using PP&E, and then he's dividing the earnings by that. So high numbers, look, especially compared to what they were previously. No wonder it's tanked. 13% free cash flow yield. It's 17% there. 24% there. Your return on capital's come way down. It's quite consistent at this point, actually, wasn't it? When was this? What year was this? I need to freeze this pane, don't I? How do I do that? Come on, how do I do it? Page layout, freeze pane. Oh, where's freeze pane? I'm sure it's up here somewhere. Freeze pane, here we go. Top row, freeze pane. I'm sure I did this before, freeze pane. I don't know why it stopped. I will save this. Bit off screen. Where was I? So share count's gone up slightly. Revenues, a huge duck and came back. I tell you what I wanted to do. 2021. What was the price in 2021 when the return on capital was really good? Dear me. Here. In fact, people were already on the potentially overvalued bandwagon here. Look. Comfortably traded for a very long time in this range. Pardon me. Come on. Where was the high? Up here? It would have been up here. Low, high, low, high, low, higher. Yeah. I mean, if you were trading between these margins back then, you could have done that for many years and returned. How long did that take? Just over a year, 60%. Now we are here. I mean, it would have been a good buy down there, wouldn't it? Let's have a look. Tangible value $5 a share, yeah. Value of 6. Simple free cash flow margin improved. Interest expense massively improved. They paid down some debt. Oh, look. I don't know if Lily was using net or using. There is a website, isn't there? Hang on. Lilu. Bruce Greenwald. Lecture. Notes. Is that right? Is it this one? Person here. I think it's this one here. Breaks down the entire lecture for you. And somewhere down here. Sure, when Lilu starts looking at businesses, because there was a large question and answer point. No, not this one then. Which one was it? This one? Yeah, I think it's this one. It's the same one, isn't it? Here we go. Yeah, there we go. Timberland. So you've got it on here, so you can look at it. 300 million, 275 million working capital, probably around 100 million. Right, hang on a minute. Price to book value is relatively low. So here we go. Operating earnings is 100 million. Liquid assets are 200 million. So that was current assets minus current liabilities. Around 100 million in fixed assets. Do we have that here? It's current. Where's long term? I've found this before. Book value per share $54. Not always looking at debt, accounts payable. No, I'll be able to find it. It's here somewhere. It is here somewhere. Let's just try to see if he was using. I'm sure he must be using net fixed assets. $100 million in fixed assets. Timberland still, because we could go right way back and see. Was it TBL? No. EML, I can't remember. It was probably not floated anymore. Let's ask, and then we'll leave the video there for tonight. Lilu in is Bruce Greenwald. Oh, come on. Lecture stated he works out return on capital by using current assets minus current liabilities, then add in to the fixed assets to get 1/2 of his return on capital formula. When using fixed assets, is he using net minus depreciation? See what they come back with. Oh, he's already checked that Substack one, that Grok. Come on, see what it comes back with. Our net, fixed assets in lease formula, our net said there. When it gives me a response, we'll see. Half an hour into this video, I can't remember what we've been. Yes, is using net fixed assets, growth fixed assets minus accumulated depreciation. Fixed assets, balance sheet figure for property, plant, and equipment. Explicitly says use book value of fixed assets and to ignore goodwill and tangibles. Never adds back depreciation or switches to gross PP&E. Okay, so we would be using this one here, not this one here. So 132, 60, 132. What's it? 60 total current liabilities, 100, 104. So 65, 100. What'd you say? 200. 200. Free cash flow. It's going to be 10 in it, or 15. Where was the earnings? Down here. No, that's the shares. Earnings 33. Okay. EV's less than. No, it's slightly higher. Alright, I tell you what, I'm getting too tired to think at the moment. I will pause it on this one and we will come back to this. We will have a quick look. I don't think there's any liquidation value. Could we come to that quickly? Balance sheet. Current assets. I'll call it cash, but accounts receivable. What would you recover of that? 80%. Inventories. very difficult to know what's recoverable from that. It's quite a specialised industry. But total liabilities of 154, 132. What's the price? $7. Okay. There's no real downside protection from liquidation, I would say. Expenditures have gone up. Look at this year here. This is why you've got to look at the cash flows. There's 24 million in operating activity. So they're still negative on the simple free cash flow, but it should actually be way worse because there's almost 50 million in inventories on the books, which means they haven't really bought anything, I would imagine. Does the balance sheet go back that far? It really doesn't, does it? It's only 2 years. Yeah, you won't be able to see it, but they ran down inventories effectively that year to try and help free cash flow. Which is in the cash flow shenanigans book as a red flag. 2023, what happened to the price in 2023? Down here. When it started going wrong. There you go, here, look. Maybe people would have started noticing that they were running down the inventories to boost the cash flows. Right, I'll see you in a minute. Because I'm getting too bloody pooped to keep my eyes open now. It's only just gone midnight as well. How my life has changed. For the better, I would add. I wouldn't change anything about it. But just be nice to be a bit more awake in the evenings. Anyway, I'll see you in a bit. Hopefully I can record this faster than I finished the last one. But we'll see. We'll see what life gives us. So I will see you in a minute. All right. Honestly, I can't remember where I left the other video off, whether or not I said that I will be right back or whether or not I ended the video. Not got a clue. What I'm going to do though is I'm going to crack on a little bit more. I'm going to add it into the last bit I recorded. So the transition from the last part I recorded to this is going to be utter dog shit, considering I don't even remember what I ended the last bit on. But I'm probably only going to do 10-20 minutes. I think it's going to be a much shorter video than the previous ones. Just because I'm fucking knackered. We've done some absolute miles this weekend. We went right up country to watch some motorsport on the Saturday, and then we've gone right down into Devon for one of the boys to play a rugby tournament the next day. So it has been absolute miles on the car, and I'm shattered. So I'm going to do maybe another 10-20 minutes. I'll add it to the previous bit that I recorded, and just going to chuck out a shorter video just so we can get some stuff going and up on the channel. Annoyingly as well, I've got something that I'm trying to upload and I can't fucking do it because Canva's down, so I can't. Everything's ready to go other than the thumbnail, so I'm gonna have to wait for that to happen. Unfortunately, I wanted to get it up probably tonight, but it's probably not going to happen now, but we'll see. Just going to have a look at this one here, Heritage Global, and the only reason I'm going to have a look is because I must have looked at it previously, because I've got this blue tag on it. I don't actually remember it at all. When did I look at it then? Oh, October 24. So, okay, so what intrigued me about that then was the fact that they had a lot of insider purchases. So let's have a look. Oh God, nothing for a while. The last 2 years. Look on the last 4 years. Search. There. Okay. I tell you what's gone. I mean, it's not good. It's not a large amount of money, is it? Obviously, you develop as a trader as you go along. I probably would have been interested in this. Now, in hindsight, I probably would have been interested in this. It's not large amounts of money. You know, you want to see people that are really, really invested. That's 20 grand here, 20 grand there. It's nothing. So what have I got here? HGBL, we want to get up. Oh, let's look. So I asked ChatGPT to tell me what HGBL did. And on this side, we're going to bring it up on here. So what does it do? Asset service company helps businesses turn unwanted and distressed assets into cash. Okay. Industrial equipment or financial assets. Company that mainly operates in two big areas. Industrial assets, deal with physical stuff. What they do, run auctions and liquidations, appraise values and assets, refurbish and resell equipment. Okay. So they're the people that really do deal with the distressed debt when a company goes bankrupt. These are probably the sort of people get pulled in, is that what we're saying? They also handle financial products, charged off debt, unpaid credit cards, broker debt sales through institutions, help them price, sell loan portfolios. Okay, how to generate, charging fees, commissions for auctions and brokerage. Okay, so with the way things are at the moment, they could be coming into some business, you know. Heritage Global finds value in surplus or distressed assets and help convert them into cash efficiently. Think of them like eBay plus investment bank for distressed assets. They don't produce goods, they facilitate transaction, extract value from overlooked assets. Right. 10K was the last one to come out, and that was only just come out as well in March. First things first, balance sheet. Have we got downside protection? 20 million in cash. Receivables, I mean, they're not really very high, are they? Inventory can be expected to be sold or consumed. Okay, so hang on then. Let's just explain the inventory on their balance sheet if they don't actually own assets. They don't only broker assets, some say actually buy and hold assets. Okay, fair enough. Very difficult then to figure out what that's going to be, I guess. They've been done there, sorry. Current portion of notes receivable, accounts receivable. Right of use assets not interested in 10 million in, or 11 million. And me, I still got a cough. I still got a bloody cough. Total assets of 88 million, but I'm only looking at probably, realistically, intangible and goodwill, fuck that off. Right of use assets, fuck that off, because in liquidation it's not worth anything. Equity method investments. Investment in common stock and equity method. This is not an indicator. Okay, so let's just say, explain the equity method apportionment. Yikes. Just to understand what it is. It's probably, to be honest, it's probably in their notes. There we go. Okay. It is. No, we're not reading 10K, are we? We'll just ask fucking this quickly. We don't want to search for it, can't be bothered. Explain the equity method. Ooh. Method investments net on the sheet. Sort of figure out what's in it. Stakes they own in other companies where they have significant influence but not. Okay. Okay. That's going to be quite hard to figure out then, isn't it? Or is it? CP. Okay. To be honest, Warren Buffett says you got to have a too hard pile. Monish for Price says you got to have a too hard pile. This portion probably is going to bang it in a too hard pile without. Grok would probably be better for that, asking it to go through the financial statement, the 10K. Did I even mention that? JV. Is this the right one? I don't know if I fucking clicked on that. There we go. anyway. Probably going to bang us in a too hard buy, I don't know. Well, they haven't got a lot of liabilities, have they? So, let's straight in here quick. Was it HGBL? Oh me, I cannot shift this cough. If I can, before I go to bed, which is not going to be much longer, I would try and like to get that fucking other video up. It's annoying me that I can't get it up. That could be cut into something else, can it? Right, book value 192. What's it trading at the moment? 121. So you're below book. You're also below tangible book. Not hugely below tangible book, but you are below tangible book. As Michael Burry said, sometimes sheer outrageous value is enough. You don't need a catalyst, but it needs to be sheer outrageous value. Although saying that, enterprise value is quite low. 34 million. Right, tangible books 162. What are they saying tangible assets are? Value of 56 million. Sheet. What did we say? 20 million in cash. Depends how what their inventory turnover is. It's probably not. Is it going to be on here? Oh, fucking hell, high. But that's, I don't know. I don't know if that can be relied upon in this sort of company. Say that's correct, like 20, 40, 50. So you are close to the tangible book value there anyway. So you probably could go with tangible book value for liquidation close to. So you'd have downside protection. Not a huge amount, but you would have downside protection. Now this is the problem here. Look, free cash flows negative. Earnings are positive though. Get a cash flow statement up and have a look. So based on this, we have some form of liquidation value. You have some form of downside protection, not a huge amount. Same with cash flow. What's going on here then? Why is this negative? 6 million. Right, what's going on here? Investments in the they don't really have a capex thing, do they? Like, what would it be? Purchase of property, plant, and equipment. Well, that's massively leaped. What's it done? We'll have to do this more on earnings. Because look at this. 8 million, way higher than it ever historically was. Way higher. Just ask fucking if this knows, and I think we're going to move on. Investments in EP and E is way higher than the historical. On asset handling. I don't know. I think we're just going to pass on this one. I don't really. You've got to have a too hard buy, or it's got to be backed up by this, look, by the fact that no one's got a huge portion of it in their portfolio. Who's got the most ownership? 6%. Same people. Moving on then. Moving on. Not interested, I'll take that off. I mean, down here, if you had fucking tangible book value of like 160, why the fuck wouldn't you? Not what was that? What's tangible book value in 25? That's 10 years ago, mind. Why would you even go back that far? 2015, down here. Which one's tangible book, so-called negative back then? This one here. Yeah, negative. Interesting. Alright. Not interested. Moving on. SSTK. Shutterstock. We've done that one recently. Shutterstock. So. What we're going to need to do is like alternate every, I don't know, 6 months or so, quarter, do what colour I use to say that I just looked at it. And then I know if I come across like a light blue one, I've not looked at that. I'll have to do, what I have to do, I'll have to, reds and no's, like absolute no's. How can I do that? How many colours have we got? 1, 2, 3, 4, 5, 6, 7. I did like a colour a quarter. I know I haven't looked at that since a certain time. We did 4 colours, Q1, Q2, Q3, Q4. Then if they come back up, I'll be like, oh, I haven't looked at that for a while. Maybe I'll do something like that. What's this? Clinical Research Organisation, not interested. Upbound Group. Why if I redded that? This could have happened a long time ago. Let's have a look. UPBD. Balance sheet. Oh, can't find anyway, look. No matching symbol. Doesn't mean it's not there. Upbound Group, there it is. So it doesn't mean it's not there, it's just sometimes it doesn't search properly. Interactive data, 10k. Financial statements, balance sheet. 120 million in cash. Receivables, doubtful accounts. Pretty good, even 80%. You know, if you took on 80% rental merchandise, on rent, held for rent, merchandise held for sale, so senior debt 1 billion. Okay. Me too again. New chat. Always try and do this so I can separate it. Explain. A UPBD group. Fucking almost 20 minutes into this portion already. Parent company buying several one and rent to own lease purchase business. Rent a centre, never heard of it. So, core business model. Upbound operates in lease to own, rent to own space. Customers take home items immediately, pay in installments, can own the product after completing payments. No traditional credit card check required. Okay. Alright. So we need to look into the doubtful counts on this. Usually, operating activities is massively higher. And yet revenues are down, or earnings are down. Appreciation, where's the difference there? Bad debt expense. There you go. I told you, didn't I? People potentially default in, so if we have a look on here. Compared to historical average, where's the bad debt expense come in then? Earnings before income, 108 when it was 177. Yeah. Rental fees up. Merchandising sales up. Subscription fees. Looks like it's a new thing. Cost of rentals and fees 1 billion, 1.4 billion, so it's up. So costs are up significantly compared to the last 2 years. Operating expenses, debt refinance. Oh, hang on, what are they fucking adding back in? They're calling something out. Bad debt expenses 75,136. So where's that on here? They're not taking out a bad debt expense, and yet they can add it back in. Operating expenses, total operating expenses 2 billion. Maybe it's in a different portion. Right, anyway. You definitely need to know what your bad debt and all that's going to be. Your potential charge-offs. Net originations and collections of customer. Why, that's new as well. The subscription and fees portion. Oh, come on. Portion of the income statement appears to be new, as does the. Where are we looking? It was down here somewhere. Net originations. Net originations in the investing section of the cash flow statement. Oh, fuck off, come on. These lines are relatively new and tied to a shift in Upbound's business mix. Most revenue came from rent-a-car style lease payments, so as to require ASIMA, I don't know. Company expanded to fintech style lease origination servicing, which brings different accounting. It reflects fees earned from Aspen's platform, not just merchandising, leasing. Includes merchant fees. It's a product-based revenue estimate introduces a fee-based revenue. Okay, so they've changed the business model now. In taking something else on, they've changed the business model. Right. So net originations, new lease contracts issued to customers, net originations minus repayments. Why is an investor in these leases are treated like financial assets similar to loans? When Upbound originates a lease, it's effectively deploying capital up front. Cash goes out recorded like an investment. So that's fucked this right up then, because you're not going to be able to do historical analysis. You're not going to be able to go all free cash flows of this last year, because your investing section is different, the whole business is different. It'll be interesting. I'll pull it in because it'll be interesting to see how Y Sheets treats this. Does it treat this as a like a capex, or is this still the only capex? I mean, when you originate a loan, you're going to earn money on it. But in the short term, right, UPBD, delete this shit. Oh, fuck off, let's delete this shit back here. Swearing a lot today. That's because I'm tired. UPBD, Upbound Group. I just want to see how it's. I'll move on from this because I can't do any historical analysis, but what I want to do is just see how it's treated. UPBD, right. Simple free cash flow, $4. 17. Enterprise values through the roof. Well, not compared to historical. It's actually stayed reasonably consistent. A little bit of growth. So your straight off the bat, your simple free cash flow to EV is 10 times, EV is 12 times, so it looks good on market cap until you factor in the debt. Now, debt, total liability is probably coming from originations and something. There's a 300 there, swing. That's probably, there is, come on. So again, is a 300 million swing in, where was it? Senior debt. Is this also due to, how do you spell it? Very likely yes, at least indirectly. Is there a acquisitions business there? Yeah, 300 million. There you go. Should have just fucking looked at that, shouldn't I? Don't think I'm interested, to be honest. Don't think I'm interested. I'm not huge on financial companies. There have been a couple where I've looked at and I've been like, fucking yes, that was it. FGBP. I was like, probably a day away from pulling the trigger, and then a fucking insider bought a huge amount and just took it all away from me, unfortunately. It went up like 90% or something like that from 90, was it? Maybe 50, I might be exaggerating. It went up a lot, and I was pretty pissed off because that's the first one that I was like, oh, the first one where I'm really excited about it, and it got away from me time-wise. But in general, I'm not so interested in finance companies. That one was quite intriguing though, and that people basically priced it as if nobody was going to pay back their loans. It was all going bankrupt. But if you took out all, say, everybody that was on their bad debt thing, completely, I'm sorry, I just smacked into something, don't know if you heard that, completely gave up on paying, they still had assets that were huge compared to the share price. Even if all of those bad debts ended up being complete charge-offs. Is there anything here that I like? Not really. Not really. I just don't like something I can't check against itself historically, where there's been a fundamental business change I'm not overly interested in, especially when it comes to a finance company, which generally I'm not interested in the first place. The only reason why I was with that first bank shares is because the business model hadn't changed. It was just like you could go back through and you could see that things are pretty good. And like I said, on an asset basis, it was well undervalued, even if all the liabilities ended up coming to fruition. Right. What was I looking? Oh, I just wanted to see this, and I fucking went off on a tangent. And investment, none. That's why they haven't got any. Probably because the business model changed and it doesn't know. Maybe they're using an algorithm to pull it out and they don't know how to deal with it. Because this was easy. Consistent-ish. Something happened here. But it's not zero, is it? We can see that it's not zero. So actually that 10 times is going to be much lower. What am I looking for? Investments in PP&E. Where are we down here? Purchase of property. Even if we just put that 66 in, what are we going to get? Minus 66, 863, 123. Just add it in. So it does go down a little bit. Does it? Tell you why I put it in place. I need to put it in here. Because this is where it draws the data from. Not that one. This one. Why have we got 0? Oh, because of this. Because of this. Should that be negative? I don't know. What would it be for 98? What are we looking at? No, more. Anyway, not interested. If I've got a fanny ass around with the data and I'm not really keen on the company in the first place, not interested. I ended up going another half an hour, so actually the video's not going to be much shorter than before. That's probably why I put a red flag on it. What did I write before? I haven't looked. I didn't write any notes on it. I'm just going to keep the red flag on it. I am going to end this video here because I'm fucking knackered. I need to go get some sleep. We've had several videos now where we found absolutely fuck all. So be it. I'll tell you what, I'll have a look at Bumble. See if Bumble's still collapsing, because I don't know what to make of Bumble. Oh, it ain't collapsing. I thought Bumble looked cheap, but oh, yeah. Fucker, it's up 40%. I said that in my video on it, in that, do you know what? Everyone keeps saying that, oh, they're in trouble, but they were earning cash flows. They were earning cash flows. Just got to be a bit more confident, I suppose. Because I did like Bumble. I think if you go back and watch the video, I did think that there was something there. Yes, I think it had a high debt load, but it was earning. And regardless of everyone was pricing it because the users kept flagging. They kept decreasing. It didn't have the same appeal that it did when it first came out in its business model. Like, the women had to basically say yes to the men. It's a dating app if you don't know what it is. And because the subscriber numbers were going down, I think it was being priced to bankruptcy, and yet it was still earning. And it took on, I think they bring back in the person, actually bring back into the fold the person who started it, who's also a big owner in it. It was like a huge owner, which is what you want to see from Insider. What flag? Oh, I checked. We must have earnings. Yeah. Bumble shifts to brand. What's that mean? Move from paid acquisition to brand and organic channels. Tighten performance marketing, boost member quality. I don't really understand what this means, but move from paid acquisition to brand and organic channels. What you need to know. See, subscriptions fell again. I haven't got a button on it. It's just got it mentioned in there. Anyway, a missed opportunity, I guess. If I think something looks cheap, I'm gonna have to have the confidence to just go with it. I think I hummed and hard over it for ages. I read a few things on Seeking Alpha where everyone's like, nah, not that it's done, but it's heading that way. But just because that is maybe the long-term outlook, it doesn't mean you can't make money in it in the short term. And like I said, it was earning, and the prices reflected that from the lows. So I said, well, we have 40% on it. We just seen down here somewhere. There, 40%. Fucking hell, missed opportunity. There we go. When we come back, we'll probably start from down here. I do want to look at this a minute because I do like cluster buys. Grocery stores, okay, that could be one that's interested in. Should we just pull the balance sheet up on that quickly? SEC Go, interactive data, financial statements, balance sheet. 69, right, anyway, oh, fucking hell. No, hang on, I read that wrong. Panic over. 3 million in assets, so they got 900 million in equity. Cash, receivables, inventories. What do they do? Hang on, let's have a look. What does it go? I was just about to say goodnight because the video's long enough, and now we're offers brand name consumable fresh products for a network of independently operated stores. So I'd imagine that turnover is quite fast, in which case you could probably put a reasonably high value on what we're doing. High value on their inventories. Goodwill's quite high, mine. And it's been written down. How many shares? Get a graphic calculator out a minute. 100 million, we'll say 100 million. By the way, 900 million. What's it, 100 million shares? Yeah. $9 in fucking. You've definitely got some sort of downside protection. Cash flow is probably negative. Close to. What is in here then? Let's dragging this down. So what we do, I'm going to end this video here and we will look into Go. I will keep it up here for the next time I turn the computer on. We'll look into that and see, because it looks like there's pretty decent tangible book value on it. Nobody likes it. Wow, definitely nobody likes it. All right. Bumble disappointment aside, we found nothing. Again, it is what it is, but I'm just vlogging my journey, and you got to say no to everything. Monish Bright reckons if he found 1 or 2 a year, he's happy. So that's a lot of saying no, and it's probably not going to make for good videos, but it is the process that I'm dealing with, trying to be a value investor, trying to become a successful value investor. So, I don't know, we'll see. All right, thank you very much for watching. We'll go into Grocery Outlet Holding Corp next. I will see you on the next one. Please like and subscribe, and take it easy. Good night.